Hi, everybody. This is Jerry Selak on behalf of the Society of Technical Analysts, the STA. And today I'm joined by Elizabeth Miller from Mars, and we're going to be talking about her participation on the panel for the STA's Technical Trading Systems from Classic Charting to AI Developments Conference on the 16th of April, 2024 in London. It's an in-person as well as hybrid meeting, so you can go on the web to see it. Hi, Elizabeth.
Hi there.
All right. So you're on the panel for this year's discussion, mostly because as at Mars, you're one of the lead analysts there.
You buy commodities to make things.
Yes, you're basically one of the main food companies in the world, which is fantastic.
Yeah.
Now, your experience as previous podcasts, we talked about it. You've gone from providing research to sell side bankers and brokers and people in the city on their Reuters, in the old days, Telerate and Bloomberg
Yep.
terminals as well, to actually working in the city of Bank of America and Deutsche, running your own research firm, and now working at Mars for the last 16 years, I believe.
Yep.
So you are effectively the person who's seen everything move from classic charting to AI developments, correct?
If you think about it that way, yeah, I guess so. Starting from doing paper point and figure charts back in MMS and updating things online and not being able to edit, to these days seeing like quantum computers and everything that's coming up. It's amazing how fast the world has moved in the last 30 years.
Yeah, I think that's, putting it mildly. So in terms of what comes across your desk, do you see a lot of, the differences in AI sort of generative sort of ideas as well as the machine learning stuff? I mean, I guess you have to be able to discriminate, correct?
Yeah, so I mean, depends what you mean. I mean, when people talk about machine learning and they talk about, it's like, well, hang on a minute, what do you mean by that? Machine learning's been around since the 1950s, ever since we had the machines, right? And it depends whether you mean, are we talking deep learning? Are we talking generative AI? Generative AI is the one that everybody's getting excited about now, the chat GBTs of the world. But those are language models. So they're not really fantastic for the sort of thing that we're talking about for trading, because they're not good at math. They're very good at finding you a function in Excel or finding you a function in your DAX programming, if you're doing DAX, and saying, try this one. They're not so good at actually doing the deep math. Deep learning type models have been the ones that have been around forever, since the 1950s. All that's happened is, in my view, the computers have got bigger, faster, stronger, the $1 million man of computers. So that's actually making things quicker, and we found more efficient learning programs. But there's a big difference between what people are getting excited about right now. And if you think, the moving averages, technicals, and econometrics all count as a type of machine learning. So all of that is very, very old, right?
So to put it in Star Trek terms, we've gone from flashing lights and big reels of tape to maybe much smaller, compact computers. But in terms of the actual work that they're doing, it's still, you have to make a difference. Can you do the data work, or are you manipulating text and looking for information to regurgitate it?
Yeah.
Now, I was going to say, one of the problems I've always had with stuff like this, because I've been working with models, and as you know, since the mid 80s and stuff, but garbage in, garbage out has always been the risk. Do you see that as well?
I think everybody sees that. And if you're buying like live commodities, you've got, there's always going to be a fat finger error somewhere. There's somebody out there who's actually doing
I've been that person
in the first place. Yeah, we've all been that person, right? And the other thing is, what do you do when you have bad actors? So what happens when people are poisoning the data pool? I mean, we don't think about that too often, but it's a possibility. That's something else.
So you don't just mean the random outliers. You mean on purpose bad data.
Yeah.
Wow. Okay. That's okay. I don't think people really model that too much. I know you have computer programs that try to say, if this figure doesn't conform with the rest, then maybe kick it out and stuff. But then you run the risk of kicking out good data that's just an outlier.
Yeah. And then also, how do you allow for, I mean, the computers are usually based on a sort of a Bayesian principle, right? So basically, this many things has happened in the past this many times. So therefore, if it's never happened before, it's impossible. Correct. We know that with climate change, with all the governments who get involved in all these different things, that's not true. So you need to allow an element for some of these things that the computer might not have thought of. And that's really difficult to embed in these programs as well. Okay. It's got nothing to do with what we were just saying, it's just a random thought.
Just an outlier observation.
It's an outlier observation.
Okay. Well, I know I'm looking forward to the conference and being able to ask a big panel of people all sorts of interesting questions. Some of them are data providers, I think from
Yep.
LSE/Refinitiv, and some are like you, practitioners, who basically are saying, look, here's what I need out of a model, and does this deliver? Is that fair
Yep.
enough?
Mhm.
Cool.
Should be fun.
All right. Well, thank you for your time, Elizabeth. I think, we're lucky to have you on the panel, and we're looking forward to seeing you there.
Okay. Take care. Bye.
See you. Bye.